The Firm, India's only show on corporate law, tax and audit matters.
This Diwali brought a new dhamaka for India Inc. The government announced the levy of a 0.5% Swachh Bharat Cess on all taxable services. Now, to be clear, this levy was proposed in the budget itself, but no date was determined then. On November 6th, the CBEC issued a notification saying the cess would be levied effective November 15th. And so, starting yesterday, the service tax rate has increased from 14% to 14.5%. But like in all things tax, this levy has stirred a controversy regarding the lack of notice, unanswered questions, and most importantly, the lack of input credit. All things that industry has been grumbling about through the Diwali week. So to discuss why India Inc. is so cessed out, I have with me two tax experts, Hari Shankar Subramaniam, the indirect tax head at EY, and joining me here in Mumbai, L. Badri Narayanan of Lakshmi Kumar and Sridharan. Gentlemen, to both of you, a very warm welcome. Hari, the finance minister had given us due notice in the budget this February when he said that he intended to levy a 2% Swachh Bharat Cess. So why has it come as such a big surprise to industry?
Menaka, I don't think the Swachh Bharat Cess itself has come as a surprise. What has been a surprise has been the timing, So like you rightly said, this notification making it effective on 15 November came on 6th. And then there was a clarification because there were several issues and several questions which came on somewhere around the 12th of November. And then the final FAQs, which answered most of the queries which are in people's mind, came on 13th. So fundamentally, it came right in the midst of Diwali break. And when you have a cess of this nature and you got to interpret the point of taxation rules on its applicability and so on and so forth, and you got to bring in system changes on invoicing, accounting and everything, then the time wasn't there during this entire Diwali break because people basically were on leave from 10th, and that created an issue in the industry. That's where there was so much of heartburn as far as the timing of the cess was concerned. The cess by itself was, like you rightly said, was an intention that was made clear by the finance minister in the budget speech. So this was something that was expected, but the timing is what really created the problem, And generally the industry wanted it to be implemented only by 1st of December so that there is some time for people to think through, make the system changes and then hence apply the cess as it should be applied on each of those transactions.
Okay, I'm going to come to those system changes, but before that, Badri, what has last week been like for you?
Well, last week has been an eventful week. Didn't expect it to go the way it went.
As busy?
Very busy, because as you know, when they first introduced this, they just had two notifications which came out.
Correct.
It was assumed as if there were only two categories of services, and absolutely taxable services and just exempt services. But there's a whole host of services which fall between these two. The rebated services, services which have got special rules for valuation, special rules with respect to how you're going to calculate a combination of goods and services, restaurant services, and so on and so forth. So without too much of clarification, we had these two notifications just land on our lap. And then
that was on the 6th.
On the 6th, on a Friday evening. It's a really nice way to start the weekend. And so we had to plow through the next few days, answering probably hundreds of queries, trying to give as neat and good legal solution and a compliant solution for the industry.
Sure.
And we had a lot of people who kind of gave us a brunt of their displeasure.
But because it was Diwali week, most people were off Monday, Tuesday, Wednesday, Thursday, Friday.
And today, our systems are fairly complicated. These are not simple systems that we implement. You have a separate line item, you don't have any clarity on credit, you don't have any clarity on how you're going to value what the abatement is going to be. And so to be able to make changes, you have no guidelines. And then, the ERP systems today are not simple, systems that you can just change overnight. You need to have IT. You need to be able to help them how to do that. Our returns are filled through the systems. Our compliance are through the system. So it's quite difficult to give answers when you do not know what the entire story is. So it was quite an eventful few days.
Okay, that brings me to two questions really. Really, how much notice did we need for systems to be ready for something like this? But more importantly, what is the overarching impact of this? So now do we know what this applies to? From what I can read of the notices, this applies to all taxable services, right? So every taxable service that was earlier being taxed at 14% will now be taxed at 14.5%.
Absolutely, you're correct. So two things. So first, how much time do you require for implementation of a system? Generally, we would like to have the systems implemented correlating to your return period. So you have the return periods going from April to October and then October to April back again.
Quarterly.
Quarterly. 6 monthly.
Half yearly, sorry, yes.
So you'd like to have that synced with that so that you have an ability to be able to do that. So
ideally they should have introduced this either on the 1st of October with at least a month's notice.
Exactly.
Or the 1st of April with a month's notice again.
That's correct.
Okay.
So that you have the time to be able to prepare. Today, for example, your return, some period is going to be covering a non-Swachh Bharat period. Some period is going to be covering Swachh Bharat. Your invoicing changes. Everything changes. According to me, ideally, you need about a month's time at least to be able to make all these changes. And then, of course, coming back to the 14.5%, yes, today all taxable services are going to be more expensive by 0.5% or a proportionate amount of it, because there are some services which are taxed at an abated value.
Okay.
But the key thing is, it's actually not 14.5, it's going to be a little more than that.
Why is that?
Because there's going to be no input tax credit.
So we'll get to that, because that really is, I think, the core of where all of this grumbling lies.
Absolutely.
But Hari, do you agree that, industry should have been given at least a month's notice? Are you saying Badri and all the other tax experts that I've been speaking to through the weekend are just taking time to get used to this?
Well, definitely the Diwali weekend was probably one of the most busiest in recent times, with all those queries coming from clients. A minimum of a month was what was expected, and our initial reaction after the 6th notification was telling the government to try and postpone it at least to 1st of December. Ideal would have been a half-yearly start on October 1st. But 1st December was the minimum that people would have expected, because that's the time that you would require to make those changes in those complex IT systems that people have. That's one. The second biggest surprise was the lack of credit. Now, this lack of credit will mean not an impact of 0.5%, but could mean much more depending on the layers of supply chain.
Hari, we won't jump the gun on lack of credit. Let's leave that as a surprise for the conversation to come up. Right now, we'll talk about implementation. And one tax expert I was speaking to said it's really not that big a deal. He said in the ERP software, and correct me if I've got this wrong because I don't deal with this, there is a column which usually is vacant, which can be utilized for this 0.5% cess. So again, I ask you this question: is this really a problem, or is industry just grumbling about this? Hari?
No, it's not as simple as it sounds, Menaka. I mean, you might say it's only a one line, which is a blank field, which has to be uploaded with a percentage of cess. That's not the only point, Like Badri was mentioning, you will have to interpret the nature of transaction and then interpret the point of taxation rules. And in each of those transactions, the tax may be applicable or not applicable. You will have different kinds of transactions on a particular day of the start of 15th of November. So basically, it is not a simple field entry. It has to be a lot more things, and those clarifications really came in only by 12th or 13th. So fundamentally, you were left with 48 hours to make those changes, and right in the midst of Diwali break. That was the biggest pain point for the industry.
Okay, we're going to take a quick break here. We've only gotten to the beginning of this conversation. We'll take that break, and when we come back, we'll discuss whether all the answers that need to be provided with the implementation of this tax have been provided so far in the clarification of the FAQ. And we'll, of course, talk also about that most important issue of no input credit. That's right on the other side of this quick break.
The Firm, India's only show on corporate law, tax and audit matters.
Welcome back. You're watching a special edition of The Firm. We're discussing why India Inc. is so cessed out about the Swachh Bharat Cess that was levied starting yesterday, that's Sunday, the 15th of November. Badri, where do you see the biggest implementation challenges? Because there were clarifications issued last week. There was an FAQ issued. Now it's a little clearer what the points of taxation are, when services consumed when and invoiced when will attract this SPC or not. So where are the key challenges according to you?
Like you said, a lot of the clarifications have come, and I think the big elephants in the rooms have been addressed. But these taxes have a very strange way of coming back into litigation years later.
Sure. And
the points of transition tend to be the ones which are highly litigated. For example, today you have a clarification saying that the transition into Swachh Bharat Cess is going to be based on something called point of taxation rules. It's a unique set of rules that have been put together for service tax, which basically tell you what tax to be paid when there is a change in the rate or a new tax is levied. Now they are saying we're going to go by Rule 5 or the point of taxation rules, which says that if a service is going to be taxed for the first time, then something will follow. The question then comes whether the service has been taxed previously or is it going to be taxed for the first time now. Because if you see Section 119 or the Finance Act of 2015, under which Swachh Bharat Cess is levied, it says Swachh Bharat Cess as service tax. So there are some confusions which are likely to lead.
So effectively the application of the SPC is the first point of taxation is what you're saying?
Correct.
Or could be considered?
Or considered. If it is considered, then we are good. If they're saying no, tomorrow the department comes around and say no, maybe that's not the point of taxation. We need to go with another rule, say Rule 4, which talks about change in the effective rate of tax. If they treat...
Well, what does all of this mean? Effectively, what will be the impact on the company?
Effectively, it will still be 14.5%.
Right.
But it depends during this transition period. If a service has been rendered after 15th of November, but invoiced and paid before.
But they've clarified that, didn't they? In the clarifications, in both places, they've told you when SPC applies, when it doesn't apply, and they've said it doesn't apply where the payment received and invoiced before the service becomes taxable, that's prior to 15th November. It does not apply where the payment is received before the service became taxable and the invoice is raised within 14 days. But it does apply for all other instances thereafter.
You're absolutely right on that. They've clarified it by way of a circular. And they're basically suggesting that you go under these rules and therefore you will be safe. But we still don't have a test of whether these rules will stand when you ultimately test, because the wordings of the rule are not as elegant as the clarification is suggesting. So I'm just saying the transition could have been much better handled, because it's a new levy, not under the service tax, but a new levy in itself.
Yeah.
And therefore,
because usually cesses that I've at least come across are a tax on the tax.
Exactly.
As opposed to a tax on the actual value of the service or the good.
You're
Here
right.
it is a tax on the value of the service in that
Absolutely.
sense, right?
What I feel is that there might be some avenues for litigation in the future, and there might be some confusion with the transition provisions for the limited period of time. And that's where probably there could be some issues.
But besides transition provisions, have all other questions been answered in terms of which services attract what? I mean, for instance, there are some services that attract alternate service tax rates.
Correct.
And I think they've clarified now that, therefore, proportionately, that much of the SPC will apply to them.
You do have to give credit to the government, because they have clarified it very quickly. And they have tried to apply the most benevolent provisions, so that even if a service is rendered later on, if you invoice within 14 days, they don't want to apply this. So the government has been very good in making it benevolent. But I still feel that it might lead to litigation, which is another cost. And these kind of confusions can be avoided.
Okay, let's get Hari's view on that. Hari, besides responding to where you still think there are unanswered questions or questions left open, can you also tell me which specific industries do you think would be most impacted by that lack of clarity?
No, the lack of clarity is going to be more on the interpretation of the point of taxation rules, and that's where the issue will be. Okay, they've been good enough to clarify, and I do agree they've been benevolent in the clarifications. But the grids that they've clarified are only some basic grids. There will still be several issues that people will face. So telecom and industries of that nature will still have issues of what is going to be the point of taxation, which rule will you invoke. They have spoken about Rule 5, but there could be some specific areas where there could be rules other than Rule 5. So those are the areas where there will be problems in interpretation, and those are the areas where how would you deal with continuous services and things of that nature, long-term contracts and so on and so forth. So some of those areas will still have a problem of interpretation, and some of those will have to be positions that are taken by the industry. Well, my view is, while Badri might come from a typical litigant view, my view is industry by and large will take a conservative view and err on the side of caution as far as the SPC is concerned. And so that's precisely the reason why you needed time to change those systems and ensure that you do it in a manner where tomorrow there is not a litigation that comes up due to this, because this is a new tax. And hence the entire interpretation of both Section 119 and the other sections becomes important as far as this tax is concerned. But in my view, the way I hear the industry, they will take a view which is more cautious than not, and basically apply where they believe will be applicable.
So we've established that this tax applies across all.
Will be spent on
Hari, we've established that this tax applies across all taxable services. You pointed out the telecom industry for one that may see some confusion in interpretation. Can you just talk me through whether there are some industries that will be worse impacted than others, if at all?
Difficult to say at this stage, because the impact will be by the fact that there is no credit available in this particular.
So that's really the big bugbear here. Okay, so Hari, then let me come to the core issue here. The core issue is that this is a new tax and there is no input credit available for this. Now tell me why that's such a big issue.
Why? Because it will be a straight hit. If you don't have input credit in the past in cesses, whether it was education cess or any of the cesses, there was a credit that is available. Today, it is going to be straight on the value of taxable services. and it will be a straight 0.5% cost.
And it
could be not only 0.5%, it could be more than 0.5% depending on the layers of supply chain in a particular service provision. And anyway, manufacturers won't get a credit because on the output of excise they don't have any SBC.
And see, there are some interesting concepts which are important for GST as also for our current service tax. Things like fiscal neutrality, backward integration. What that means is taxes should never be the basis for you to get competitive benefit when you're doing business. So for example, let us say, just because let us say I am a bank, okay, I should not get any benefit by being able to backward integrate with a printing press to be able to print my prospectus or or any other this thing. Because if I'm making a supply within the company, then there is no SBC. But if I get the same supply from outside, then I have to apply a 0.5, and if I don't get credit, that becomes a cost to me. So the 0.5 starts creeping because it becomes 0.5 on 0.5 every value.
At every level of the value chain.
So this goes directly against the concept of fiscal neutrality.
Okay.
And fiscal neutrality basically ends up having people vertically integrating and horizontally integrating, so that you start doing all your businesses within the company.
But explain to me, why is it, as Harry pointed out in previous cesses, input credit has been available. Why have they chosen not to give that or offer that this time round?
See, credit is a completely artificial scenario. It has to be given by the government only. There can be no deemed credit.
Why have they chosen not to give it this time round?
Probably they just want to collect more taxes.
Hari, you have an answer to that? Why have they chosen not to give it this time around? Because I know you're part of many representations that have been made to the government on this.
In fact, I'm surprised, with GST on the annual, and the whole concept is to create a total neutrality as far as the tax chain is concerned. I mean, they will be bringing in a cess at this stage and bringing it without credit is something which has come as a little surprise to me and even to many in the industries, Because you just going to go around GST. You already have several, in the GST scenario also, there are several cesses which are still going to be outside GST because Article 270 is not something which has got amended. So to bring in SBC at this stage without a credit is something which is a real surprise.
That's the other thing. There's one more thing.
More taxes. But you might as well increase the service tax rate. Why create?
But are you saying increase means what? I mean, most people are expecting a service tax rate of 18% to sink in with GST. Are you saying that between now and GST they'll go from 14 to 18%? Is that what we should expect? And let me add to that one more question. When the finance minister announced this cess in the budget, he said it would be a 2% cess. They've applied only 0.5%, essentially giving you an exemption, if I understand correctly, of 1.5%, Hari, which means that 1.5% could come in any time in this cess, which means we could go from 14.5 to in fact 16% any time this government chose to take away that exemption.
If I recall, when the budget announcement of Swachh Bharat Cess enablement came, one of the questions that was raised by many industry chambers to the government was, with this, it could potentially, service tax could be potentially 16%. And in response to that, one of the responses was, well, with GST, anyway, those rates are likely to get aligned more towards 16 to 18. So that was the answer that was given. So fundamentally, the expectation is, if 18 could be the revenue neutral rate for GST, then services are expected to go to that rate. So 14.5%, 0.5% could just be the beginning. If GST is around in 2016, I don't know whether they will do any further increase in between and probably might wait till GST arrives. But to do this SBC at this stage without a credit was a surprise.
Yeah, Bhatri, we don't know when GST will come in, right? As of now, we haven't even gotten the constitutional amendment bill through, though there has been some other progress on the business process papers side. But I'm just curious to know, are we going to now see creeping increases in service tax all the way up to 18%? And is it fair to have a GST rate of service tax but not have all the other benefits of GST in that sense?
It's absolutely, according to me, criminal to be able to continuously increase the taxes merely because on the basis that the manufacturing sector suffers more taxes, and you continuously increase the service tax without the benefits that are being provided in a GST system. I mean, 18% is a very, very high number. You have to understand, 18% is not just in itself. It's going to have a huge inflationary cost on our entire economy. So services constitutes now a larger piece of taxes that we collect among customs, excise and this thing. So I think it's going to have a real impact on various other aspects of our economy without the other underlying benefit of GST, where you're going to get full credit of the input and input services and sales tax and cesses and everything. This really goes against the tide, to be honest. Here at GST, you're talking about allowing sales tax credit against excise and service tax. And now you're saying, I will not give you Swachh Bharat Cess against Swachh Bharat Cess. So it goes really against the tide. And to keep increasing it without monitoring the inflationary effect on the economy, without monitoring how the business are going to change, and business will always go to territories where it's going to be low tax. So if you're going to have more and more taxes in India, they're always going to figure out ways by which they can have establishments outside and provide service from outside.
But in the case of an indirect tax, if you provide a service in India, consumed in India, you're going to have to pay that tax anyways, right? So you can't escape this.
You can't escape that. But you're going to have more and more people try and have the input services from outside, consumed outside. There are going to be all sorts of things. It gives you more incentive, right?
Yeah.
To be able to do
I have an ideological objection to the continuous imposition of cesses in this country, which is not just the problem with this one government, but with, and I think you've drawn up a list of some 19 cesses that this is not what all of us, citizens pay across industry, etc. There are some 19 cesses. My other ideological problem is that we don't even have specific projects earmarked for which this money is going to go towards, right? It's going to go to the consolidated fund and hopefully help a cleaner Bharat.
Correct.
But no specific projects as yet. So how would you say, if you looked at this in totality, since we're now in the last minute of our conversation, would you say this has come as a big setback for industry at this point in time? This is really not what was expected, and as one expert told me, this is tax-tortion, as he called it. We get a new tax phrase every week, so this is tax-tortion.
I think India, we are really good at coining these because we have so many opportunities to do so. I really feel that with CSR, with the Swachh Bharat and so many other things that is being imposed at a time when economy is in a critical situation. There is a lot of pressure on economy to come back up, and then it's just that businesses are just coming up. There's so much of liquidity crunch in the market. To do something like this really goes not in the best way for putting the economy back on track. So I, for one, have never been an advocate of increasing your taxes in this manner, and I think you're a firm supporter of the very same thing.
Hari, last word to you. I have 20 seconds. Is this tax-tortion?
Well, I really don't want to use any terminologies of this nature. The fundamental fact is SBC was known that it was coming. The only thing I would have expected is brought it in a time period where somebody could implement it correctly, come up with that so-called Swachh, the credit mechanism, and still people would have borne with it, because this was something that they had made public in the last budget. I don't believe they are going to increase service tax rates to a rate of 18 in the interim before GST. I don't believe that will happen, in my view. If GST comes around, that could be one of the potential rates, so we still don't know what the rates are going to be. But I don't believe in the interim they will go and increase the rates to that high in service tax, because that would definitely be inflationary.
All right, gentlemen, we're going to leave it there. We're at the end of our time, but thank you to both of you for joining us. I'm sorry you had a fairly difficult Diwali week, but in India, every week we have one more tax issue to talk about. Thanks very much for watching The Firm, and of course you'll see our regular episode on Friday, which will not be on tax. We'll find something else to talk about.
The Firm, India's only show on corporate law, tax and audit matters.